Over the past year, National Bank has had its stock roar upwards with over $40 a share gain. And now people are starting to ask the question, is this bank stock overvalued? Well, in today's video, I'm going to tell you the reasons why I don't think it is. I'm going to compare it to the other big Canadian banks, and I'm going to tell you why I think National Bank is still undervalued. Welcome to Golden Arch Investing. My name is Liam, and on this channel, we love to talk about Canadian investing. If that's something that interests you, please do subscribe to the channel and like the video. It doesn't cost anything and it makes a massive difference. In today's video, we're really going to break it down into a couple categories. Our first category today is going to be me comparing the PE and the 5-year growth CAGR of National Bank against the other big 5 banks. Then we're going to jump into the dividend and dividend growth numbers, which is a big part of why I personally own this stock. And then I'm going to talk about the unique things that I think makes National Bank a solid bank investment in Canada, the kind of things that I think are going to give them a unique position to grow in the not so distant future. So first and foremost, let's dive into some numbers here. I don't think any of you are going to be surprised when I say Canada's banks are all fantastic. These are amazing, profitable businesses that deliver amazing returns to their shareholders over time. They're also investor favorites, meaning that they have had a solid base of investors that have owned these stocks for decades. But National Bank, being the new kid on the block, has had some hype around it recently that makes some of these investors think that it might just be a little overvalued. To try and get us a read on this, to understand a little bit about exactly how much price action reflects reality here and whether or not National Bank has kind of got out of whack, we're going to compare it to the other big 5. Let's start by talking about their revenue growth. And I've got some of the numbers right here in front of me. When we're looking at the 5-year growth for the big Canadian banks, and we're going to go in order here, we're looking at RBC at a 5-year compound growth of 4.2, which is a pretty solid number. Nice mid-single digits. Next, we've got TD at 7. Be a really awesome number if they didn't have all their problems down in the US, obviously. But 7, pretty nice number for TD. You got BMO at 3.4. Okay, a little bit less than RBC. A little bit better in the last couple years than the 5-year looks like. Scotia sitting at just over 1%, which is a tough number. CIBC is doing an amazing 6.4%. Really impressive CIBC. And then we have National Bank, who's sitting at 8.9%, blowing everybody out of the water and almost 3% above everybody other than TD. And with that in mind, right, you're thinking about the growth of this company. Obviously, investors are willing to pay a little bit more for a company growing much faster. And so you'd expect National Bank must have the highest PE, right? It's got a little bit of hype. It's been growing fast. Well, again, I've got the numbers right here. When we're looking at the PEs in the same order here, RBC's got a 15. TD's got a 16. BMO's at 13. That's a pretty good number. CIBC at 12. Scotia right there. And National Bank at 12.4. So National Bank is sitting right between, Scotia, CIBC, and BMO, with both RBC and TD significantly higher, middle of the pack, even though it has far outgrown these companies over the last 5 years. So maybe the question is that maybe it's not about the past 5 years of growth, but the next 5 years of growth. Are investors expecting National Bank's growth to slow down? Maybe, but I personally think that that's ridiculous. National Bank has done a fantastic job of growing over the last 5 years, and all of their moves make me think that they're going to do an even better job in the next 5. In fact, with the acquisition of CWB, I think National Bank could maybe hit low double digits in the next couple years. And that number makes this PE ratio look ridiculous. If you're giving a PE ratio of 12 and their growth hits 12, you should be scooping up shares as fast as possible. Is that necessarily going to happen? Maybe not. But I do think that the growth numbers look fantastic for National Bank. Now let's talk a little bit about dividend numbers, right? We know that one of the things Canadian investors love about these stocks is their dividends and their dividend growth. These Canadian banks are some of the most reliable, stable companies that any investor could hope to hold. And so having them in your retirement portfolio to pay you out a dividend when you're ready to retire is most investors' dream. So you probably are hoping for the best possible dividend growth numbers from each of these companies. And I've got some numbers right here. RBC is currently at 6.6% on their 5-year dividend growth. TD is sitting up at 7.1%, BMO at a great 8.6%, Scotia at 4%, CIBC at 5.2%, National Bank sitting at 10.2%. So even that amazing BMO number, they're beating easily. They're easily beating their competition. So, okay, maybe it's not dividends that are setting this company back, right? Their dividends look pretty great. Dividend growth is looking really solid. Their growth in general is looking pretty great. So maybe it's just that investors don't believe in the story. Well, again, one of the things that we have here that is just unique about National Bank is where they come from, what their real strategy is, and how they plan on growing. National Bank, of course, as all of you know, is a Quebecois regional player that has grown into a nationwide giant. And they know better than just about anybody how to serve that region and that group, particularly of younger Quebecois, who are a category that I think could see similar, maybe not quite the same, but similar strategies used in Western Canada where National Bank is expanding. Think about it. They dodged the big markets. They dodged Toronto. They've dodged Vancouver. They've avoided some of the massive challenges that all of the other big five banks have seen in provision for credit loss based on all of the people who are underwater in these, condo projects in Toronto or prefab homes in Vancouver or any of these stories that we've seen in the Canadian markets over the last year or two where banks have ended up in trouble. Well, National Bank has dodged that. Quebec has seen great growth. It has almost always been a more inexpensive place to live than Toronto and Vancouver. And it's been growing fast, both sort of population-wise and in economic numbers. In fact, even their housing market is growing great over the last year. They've seen fantastic growth, and National Bank has benefited. Well, their move just now has been to basically skip over to Western Canada, and specifically CWB was an Alberta-based company. And anybody who knows the Canadian economy right now knows that Alberta is currently the fastest growing province by population and economic numbers. If there is one place you want to be in Alberta right now. If you are looking to, sell mortgages or offer loans, there are so many people coming to this province, which is my home province, and looking for better opportunities. Well, National Bank just bought a small regional Alberta bank that, yes, has grown into I wouldn't really say nationwide, but has expanded quite a bit beyond just the region of Alberta and became quite a formidable player in their own right. But now they have all of that institutional knowledge. There is no bank that knew the Alberta market better than CWB. And so having acquired all of that knowledge, all of that skill, all of the locations and the infrastructure and loan book and all that, sure, but also just having that knowledge, knowing the region, means that a lot of the same things National Bank was able to do to Quebec, their new, be it them owning CWB and CWB continuing to operate as that brand or their new National Bank branches in Alberta, can probably offer a similar compelling product to Alberta consumers. And so we get to the end of this video and we're looking at National Bank sitting at a middle of the pack PE with top of the pack revenue growth, top of the pack dividend growth. And it leaves me sitting here wondering, how can people be talking about this stock overvalued? How can you use those words in the same sentence? I think it's clear the National Bank is undervalued, that we're not baking in the growth. And yes, banks are complicated. And I understand that these numbers do not make the whole picture. But I think National Bank has a pretty unique proposition to Canadian investors. I think this is one of the few banks that really has a chance of doubling, tripling in the next couple of years. If they can take the opportunity that they've got in the west of Canada and really execute. And if their fantastic management team can continue to show that they understand regional trends and they know how to appeal to regional consumers, I see no reason why this couldn't be the fifth biggest bank or the fourth biggest bank in Canada in this decade. And yes, that's huge growth that I'm just sort of off the cuff predicting, but I really do think they have a chance. And I think it makes a lot of sense to own this company right now. And that's about all I have for you folks today. If you like this video, please, again, do subscribe to the channel, like the video. Costs nothing and it makes a huge difference for us. We love to talk about this stuff every single week on the channel. And I hope I will see you in our next video.